Welcome back to Market Insights, where we break down the economic climate and what it means for your investments. I'm your host, Naim, and today we have a lot to unpack regarding global market tensions. We're joined by our expert guest Naim. Thanks for being here.
Thanks for having me. It's great to be back.
Let's dive right in. NVIDIA is set to release its earnings report soon, and there's a palpable sense of jitters in the AI market. Some analysts are even suggesting that we might be looking at a bubble. What are your thoughts on this?
Absolutely. NVIDIA has been a bellwether for the AI sector, as its GPUs are critical for AI applications. The stock has soared over the past year, but that raises concerns. According to recent reports, NVIDIA's market cap has reached over $1 trillion, which is astounding for a semiconductor company. However, if the earnings report doesn't meet expectations, we could see a significant correction.
That's a good point. Expectations are sky high. It seems like the market is operating on a growth at all costs mentality. But what would you say are the risks if NVIDIA does disappoint investors?
If NVIDIA fails to meet expectations, we could see a domino effect across the tech sector, particularly in AI-focused companies. The worry is that this could trigger a broader market sell-off as investors reassess the valuations of tech stocks. Recently, we also saw a drop in stocks like Meta and Amazon. This could be a sign of what's to come if NVIDIA's numbers are underwhelming.
A classic case of what goes up must come down, right? Meanwhile, over in the US, rising interest rates are causing a slowdown in mortgage borrowing and consumer spending. How is this trend affecting the broader economy?
Well, host Naim, the Federal Reserve has been raising interest rates to combat inflation, and we're starting to see its effects. Mortgage applications have plummeted, down nearly 30% year over year, according to Mortgage Bankers Association data. This slowdown in home buying is not just a problem for the housing market, it also trickles down to consumer spending. Fewer mortgages mean less spending on home furnishings, renovations, and so on.
That ripple effect can be quite significant. With consumers tightening their belts, what does that mean for sectors that rely on discretionary spending?
Exactly. Retailers might feel the pinch, leading to lower revenues and even layoffs. We're already seeing signs of this in the retail sector, where companies are missing earnings expectations. If consumers are less willing to spend, companies may have to offer discounts just to move inventory, impacting profit margins.
It feels like we're in a sort of perfect storm, doesn't it? High inflation, rising interest rates, and a cautious consumer. Switching gears a bit, let's talk about the crypto and commodities markets. We've seen a lot of volatility there as well. What's driving that?
The volatility in cryptocurrencies can be attributed to a few factors. First, we have regulatory pressures worldwide, which have investors on edge. For instance, the SEC has been cracking down on unregistered securities, which has led to uncertainty. Additionally, macroeconomic factors like rising interest rates often lead investors to retreat to safer assets. Bitcoin, for example, has seen swings of over 10% within days, which is significant.
And the commodities market hasn't exactly been stable either. What's happening there?
Exactly, host Naim. Commodities like oil and gold are experiencing their own set of challenges. Oil prices are fluctuating due to geopolitical tensions and supply chain concerns, while gold is struggling to hold its value amid rising interest rates. Investors generally flock to gold during uncertain times, but if the dollar strengthens, gold becomes less appealing.
So, in essence, we have this multifaceted situation where interest rates are impacting everything from mortgages to consumer spending, while tech stocks are facing their own set of challenges, particularly with NVIDIA on the horizon. It's a lot for investors to digest.
It really is. Investors should be cautious, as the interconnectedness of these markets means that a shock in one area can have ripple effects across others. Diversification remains key, but it's also important to stay informed and agile.
Before we wrap up, what would you recommend listeners keep an eye on in the coming weeks as these trends continue to unfold?
Great question. I'd recommend watching the upcoming earnings reports from major tech companies, not just NVIDIA, but also others like Microsoft and Google. These will provide insights into how companies are navigating the current economic climate. Additionally, keep an eye on housing market data and consumer sentiment reports. They'll give you a clearer picture of economic health moving forward.
Fantastic advice. It sounds like staying informed is more crucial than ever. For our listeners, make sure to subscribe to Market Insights to stay updated on these evolving trends. If you have questions or topics you want us to cover, feel free to reach out through our social media channels.
Absolutely, we love hearing from our listeners. Thanks for having me today.
Thank you, guest name. That's all for today's episode. Until next time, stay informed and invest wisely.